a.m. Eastern time in the US. Uh, as usual, let's take a look before we start. I end the day with this every day doing my homework. This is a kind of like a recap or trying to have a panoramic view of the market before getting full focus or zooming in on what is going on right now. We are in this rollover period. Today is, or this week is the last week, basically the last week of the current period or the current contract. Check this, that this is Friday. December contract has 2 millions. March contract jumped to almost 1.3 millions from 260. Okay, this is a big jump. Usually it goes from kind of like a doubles each time, but this time it just went full in. I would say basically that was it. This is it, right? From now on, I believe this is going to start to decrease. Probably this is going to have 1 million today, or maybe less, which would mean that we are basically fully into the new one. Notice also the volume here. If I check, I will check the overnights as well. Just a second, just a quick check. Just a quick check here. This is December. Check how much volume we have now, 74, and the new one has more than that, almost 50% more. Okay. Now, if we check, we go. The market is going, and by the way, if the market opens right now, the market will see this big jump, right? This is a big gap in the overnight, but this is just a new contract, no? If we start doing the adjusted, you will see the adjusted is going to be the new contract is from what it is. Basically has been trading about 46, around 46.50, something like that. And why that's important? Because that number actually puts the market above this reference. About this reference in the weekly, about this reference in the monthly. It's kind of like a key references here. You got a range here. The market is trending here in the monthly. Finally, we have an upside trend. The monthly is always the last time frame that reflects change. We're going to have, right now, we're going to have a market that is above or out of balance in the monthly time frame. Closing the weekly is going to start way outside this range as well, kind of like way up here. And notice where all this buying has been coming from in the weekly, right from this trend line. We started to draw this trend line up like 3 weeks ago, something like that. It was unbelievable how this was bought from that trend line. It's just a sign, which typically is a sign of the market that is, on the latest stage, or getting into the laggard stage. We have basically 1 month, the market having an incredible run here, a B shape here, a V shape here, almost 10% in 1 month. That's unbelievable. This is just an incredible run the market has had. The end of the year is close. We have end of the contract as well. This week, we have some important relevant, very relevant news events that can bring volatility to this market. And what are these? We have CPI on Tuesday, FOMC on Wednesday, Chairman Powell press conference. I guess this is going to be really important this week, this thing here, this one. Weekly jobless claims, PMI on Friday. But I think everything, okay. I think this is the most important thing along CPI. This market is, the structure of the market is incredibly weak below it. This is a very elongated market. There's no back and feeling here. Market comes, got too short, 4 months with a downside trend. Got too short, and what we are, I believe this is short covering rally we are seeing here. You can see there's absolutely nothing here holding this market. Multiple gaps here, 1, 2, 3 gaps. These are signs of emotions. The market just, had, when markets had momentum is a force that, I don't want to be. Well, I want to be in front of momentum. I don't want to fight momentum. Momentum ends when it ends. We never know when that's going to happen. It forms a range here, mechanical buying, very mechanical buying here, mechanical buying here as well. Big gap here, trend here, mechanical buying here, and a range. We have a 10-day range, 11-day range actually right now. This laggard stage here in the weekly, which is not seen that often. Market forming a range, getting out of this range, testing or exploring inside this one, and being rejected. Once the market is rejected, the opposite side of the range becomes the destination. And right now, the market has reached the opposite side of this range. Let's take a look. This is a quick look of the other markets here. We have ES here, Nasdaq. The Nasdaq looks even more. The Nasdaq has already checked, this gap here. Has closed half of the gap. We have only 1/2 now. Big gaps usually are not closed right away, or are not closed in the first attempt. The formation here, this market looks weaker than this one. Russell, and I'll go short covering here. This market is short covering here as well. Check this out. short covering here, long liquidation, short covering again, short covering again. The Dow, boy, that market is super elongated here. Look at this, man. Look at this trend here in the Dow. And this is very typical formation here. This is very, this is a perfect P shape here. Classic example short covering. And here as well. All the markets are very, very questionable. The state of these markets is actually quite questionable here. Okay, but going back to the ES, we have the market that has formed a range, that is in range, buying from a trend line, 10-day range here. Now, market profile. What I'm going to, in this week, this is part of the cycle. Every contract has this cycle. This is a time when I have the current contract, which in this case is December, and I start to look. This is a week when I start to work actually with March contract, which is the next one, right? The rollover has been completed, and notice all of these. Last week we were talking about how much market was being bought and sold from this area, around 45, 78, 45, 80 kind, that level. Guess what that level is, right? Which is this one, the new contract, right? This level here, this area here, 46, 30 something, right? What else do we have there? $45.30. Oh, look at this. $45.30, $45.30, $45.30. This is right there. No, but all that back and forth was happening during this rollover period. The market, and we were talking about this one, this thing as well, right? If the market opened, last week we were talking about that the market opened kind of like around this area, around this area here. The market actually would have cleared the last reference in the upper side before having the all-time high as the last one. Okay, and this is part of the homework. The market will opening right now. The market will clear this level here. It's the monthly, weekly. The next reference on the upper side, 46.60. Okay, 46.60. What do we have in 46.60? Oh my God, the market is right there, right? Suddenly, the market went from fighting, having this stock war around 4,600 to clear this, not this one, not just this reference, but this one as well, right? It is right here. Very mechanical reference in here. Momentum remains to the upside, end of the year, and you have this quad itching event, I guess that's how it's called, coming. It is just another cycle, right? If we look too close, if we are all just looking into or just looking at our 5-minute chart, this is going to be kind of like hard to see. because we are just looking too close here. We'll be looking too close. Yeah. And this homework that I do, that we need to do every time, is just to give us perspective. Okay? And what I do now, I start trading basically the new contract. If it's straight futures, if I do options, I will do the December because March will be really kind of really expensive. And finally, after looking at the bigger time frame charts, what I do is zoom in. And what I have here from last week, from last Friday, from the last day, is all of this buying, all the late part of Friday's rally coming from Thursday. This is an inside day here, breakout of inside day. It was all the market generated information. Okay, was pointing to the upside. Okay, it was inventory was 100% sure the counteraction will be to the upside. Yeah, but market opening inside previous day range, inside of an inside bar. The breakout balance was a possibility here, and the market did break out a balance. But again, the base of the late rally coming from halfback, and another halfback here. Once the market took this weak high out, once the market repaired this high, all this part came from exactly halfback. I consider this day being weak. And again, right? Again, notice what happened here. Where is this buying coming from here? Where is the next one? All this buying coming, These are the areas where the last thing I want to be here, for example, I don't want to be long here. This is very questionable long here, even here. Okay, but the difference from this day relative to this day, this is the market, even though the long is super questionable here, because it just adds more to this formation here where the long is very questionable. The difference here is that the market got too short here. The market just got too short, and then we have a short squeeze the next day. Again, super questionable long here. The last thing I want to be is long. Last thing I want to be here is long. So the long has been a very risky trade here. This is a trending day to the downside where all these longs were forced to liquidate. But as soon as the weak longs are taken out, we have another day. Another day just like this, just like this, just like this, just like this. Buying coming exactly from one specific level here. I don't care about the I don't care about the value of that level, but the action that is happening here. Again, these loans are clear, are forced to liquidate, and up we go again in the same way. What I see here is basically trading money, trading activity here being conducted, but very short time frame trading. Very short time frame trading. Traders, right? Uh, Basically, also bigger traders here taking advantage of that. Liquidating the longs and then let the market get long again. Liquidate the longs again. Yeah, use that because you have inventory there that is too long. You know that is there. You know what kind of inventory is that. It's not a strong. It's not long-term inventory. It's not a strong hands inventory. If you sell into that, those ones that are holding that inventory will be forced to liquidate because they don't have staying power, and then you buy into the sale. It happens all the time. That is what's happening now. Now, for this market to come down or to do some really, to do a flash of all this weak inventory that's happening here, for example, right? The market needs, or usually happens, or most of the times, there is a catalytic that triggers that rebalancing, a flush all that weak inventory. Here, right? Markets are irrational. Okay, markets have this randomness, and that we don't know when something is going to happen. We just don't know that. In the meantime, the market just keeps adding inventory and keeps just rolling. Every time somebody tries to short this market, if you were shorting this market, probably you were on the wrong side. But having a perspective, helps. It really helps to find location. And if I am going to be short, for example, I know the market is going higher, has momentum to the upside, and the trade is to the upside. I know that trade is super weak, very questionable. I think the best way to trade would be options. And the market is open now because once I have options, I actually have. If something happens, I don't have to. I already have my risk pre-established. All right. Market is open. Overnight inventory is short, mostly short. Market is opening inside previous day range. Market is opening also inside the 10-day range. One of the most popular trades out there is rebalancing. Rebalancing of overnight inventory. Volume, we have really look at the volume here. We have kind of like high volume, right? Can you see higher than Friday? We got higher volume to open the market, to open the week. The weekend or the week open with you open here, somewhere in here, and have a big rally here. That was a strong opening. And then selling is coming from settle. It's not, it doesn't inspire too much confidence. Opening inside previous day range is an advertisement for chop. It's an advertisement for rotation. And when that happens, I tend to give the market some time. The market just don't have enough information, or we don't have enough information to see a directional move. we know the conditions of last Friday, last week, what happened here. There's a breakout balance. The market had value to the upside, 3 days in a row, perfect balance here, and then value just starts to move higher, gets the market outside the balance, closing inside the balance. I would prefer, I would prefer market closing out above, but the market closing inside the range. I'm talking about December contract, okay? And why I have this market as well, this is when I start to see actually the references in both markets. It is one market, but two inventories building here. We have current inventory in this market. Notice how the movement is, for example, right? Notice most the activities. This market moves faster. How much volume do we have? 50,000, right? We have only 20 here, right? So that's why I started paying attention to March now, but keeping in mind that there is a lot of inventory yet to be dealt with in March. Okay. Now, the overnight profile has a very prominent POC. Prominent POC have a tendency to attract the market back and forth. Again, this time selling coming from settle, this time in regular trading hours, right? Very mechanical activity going on here. The overnight was trying to get the market towards this area here, this halfback POC, this reference. All of this inventory here came from a mechanical reference. Right now I see the market drying here. And I don't see nothing here. But the first thing I see here, for example, I have again A high is weak, it's coming from saddle. A low also weak, coming from basically overnight low. Okay, the market is inside previous day range. The market is inside previous day value area as well. So kind of like a form of balance here, right?
And yeah, we're going to talk together. So
volume dries here. Volume dries here. Okay, it was drying all night long. Every time the market tried to go lower, it just dries. For 2002, well, nothing to see here. I don't have anything yet here. And this is the thing about trading that actually kind of like kills traders. You know, we are sometimes just too anxious to trade. The market is way up here. We have a big gap or whatever. This is the adjusted contract. Market is inside here. You know. There's a big gap here, the non-adjusted. No? Now the thing is, if this, this is a fictional gap, basically. If this gap is closed, that will be a sign of very weak market. Okay. I am still collecting information here, gathering information. I don't have any if any. All the market, all of the information is pointing to the upside. Okay. The quality or the strength of the market moving in that direction is very questionable. Okay. But that is what the market is doing. Being this high, just shorting the market because the market is actually really high, that's not enough reason for me to take a trade. You know? I try to be as neutral as possible. Try to remain calm. Try to have patience. When all these things, when the market develops. Now, this day, the 8th, is the first day of the new contract that actually has a volume. Okay? Just imagine, okay? Just imagine what happened here to the options sellers here. One of the, quote unquote, easy ways to make money is sell options, right? Sell naked options. And the strategy of that selling is sell your options in choose the direction, right? Well, you think the market is not going to go. You just imagine, just base it on that principle. Just even the market was way down here, right? The last thing you expect is, the market is not going to come over here. More likely, the market is going to check this one rather than this one. Okay, and the only thing that kind of activity or those kind of traders need to keep the premium is the market closing below this area here. This week is the last, it's the last opportunity they have to keep the premium before, being basically roasted, buried alive for this market. I am still thinking that can be the case. That may have something to do with what is happening now. There are many ways to trade. Having an appreciation of the market, of the dynamics of the market, helps, right? Why can't be long here? By understanding what's going on, what kind of risk I'm taking, it will allow me, that will allow me to take, to measure my risk, find location, and take my trade. Market's back as seller, for example, right? Market's back as seller. Market is outside again of the 10-day range. Value, even though it's really early, it's too early yet, value is overlapping to a higher. It's overlapping higher. Volume, we have a significant increase of volume. I'm going to move. Oh, by the way, Friday's volume was very low. Okay, notice what's happening with volume here. Volume is decreasing. Volume, market going higher, and what's happening with volume? Volume is decreasing. If I have something, if you have a directional move, I want to see volume behind the movement. We are about almost half into the first period. We are way more than half of previous day, first period, and if everything remains as it is today, we may have kind of maybe like 20% higher volume than Friday, about that much. Let's see. Let's see how it develops here. Just watching here. It is hard, many traders would have placed, several trades now, multiple trades at this time. If that's your style, if that works, if that is working, if that kind of trading is working, if that's your strategy, so keep going, keep doing it, right? Or keep improving it. This high has been, a high has been repaired. I believe in overnight inventory. This could be, crazy things can happen. The thing of the last week, when the rollover happens, the last week is always, crazy things can happen here. There's a lot of rotation that happens. Sometimes this is really wild, because if anybody is going to hedge, for example, then we need to put some really serious money in here. Either via options or via straight futures. What market makers will need to do is actually hedge. If somebody is going to go long here, they will need to hedge that. They will need to hedge those longs. If they sell futures, they will need to buy some calls. Just imagine the portfolios here, after this 10% rally. Just imagine, but how do you lock? Until you cash. Somehow, until you cash, you don't have anything. So you will need to cash, actually. That's part of the business. I know my business, I am not into that business. I am not an investor. I'm not a hedge fund. I'm just a short-term trader. I'm watching this market. I'm trying to take advantage of this rebalancing. at the end, that's basically it, right? I'm trying to take, I'm trying to see the rebalancing, market getting too long, market getting too short. I'm working the rebalancing of those inventories. Let me open my comparator here. What do I have here? Let me check. There's nothing here. Very short time frame trading here. I'm looking at my charts right now. Don't see. Just now. If I find myself trying to place a trade, I am in a dangerous situation. The base trade comes just suddenly when you realize, oh, okay, wait a minute, right? What the heck is this? When I try to find what's happening here, should I be long? Should I be short? Okay, I'm going to be long here. Oh boy, that's usually a bad sign. Now look at what this market. The market has cleared this reference in this level now is, you can call it a resistance or whatever. Here. Trending market to the upside and why I put this here, because I saw some potential here, the market coming towards this 4,500 here, maybe at the time, right now. This is the weekly. Look at where the market is right now, way up here. This reference has been clear. This one has been clear. What's the next one in the upper side? 60, right? You see? Yeah, 60 is the next level. Where the market is right now. Right there. For 60 is right here at this high. Okay? Right here. Right here. This kind of gap here that we are watching, we're witnessing here in this also happened. I guess it was here or here, this one or this one. I don't know. It was this. I think it was this one. Now take a look again. I'm going to close this. This is H4. Take a look what's happening now. Accumulations of volume. This is a node. Volume from last week. This is it, right? This is the highest volume here. Notice how it dries here. Now there's more volume being added here with another node just right below. Notice this is kind of like two histograms we have here. This is one histogram, was 130 minutes, but notice the formation here. Not in this formation here. Which one is going to be clear? This thing. Right around 7. Just nothing. From my point of view, for my type of trade, there's nothing here right now. This market is just so slow here. Has no confidence at all in whatever it's doing. Notice though the volume. We still have 7 more minutes to go and we have more volume now. We may have, well, this is not that good actually. Volume is decreasing. We may have kind of same volume as Thursday maybe, but that day also was low. It wasn't that good really. You have any question, please let me know. Any comments? And days like tomorrow, we have CPI tomorrow. You have FOMC. Those are the days, especially now, in this part of the cycle, that tend to attract traders. Huge volume there, 18,000. Another thing. Why I was talking about call naked option sellers is that I saw something, something special happened on Friday. Just look at this amount of blocks that we have on Friday. Just this is 4 to 4:30, and this is 4:30 to 5 p.m. After the market closed 4607, guess what that's settled, right? And 23,000 contracts being negotiated at once. Who has that power? Who has the power to do that? And this, I never know what's going on here. Is this buying? Is this selling? Is this covering? Is this taking profits? Is this hedging? I don't know. Nobody knows that. I mean, the guys who did that, they know for sure what they're doing, right? But the rest of us can't just speculate what's happening there. Value is overlapping to higher. Early in the session, to be of any relevance or significance, or to add or to get some meaning of that. The market is forming a range here, actually, between this area of value and this area of value. Four more minutes to go. Actually, about 3 minutes to go to close. Style, wide POCs have the tendency to attract the market. It doesn't always happen like that. Alright, what I'm going to do, I'm going to close YouTube here and open Twitter. I guess I'm going to put this for maybe like 10 more minutes, or maybe another period. And let's check.